We are live. This is the Kaizen Market Update. I am your host, Bill Noble. If you need a roadmap in crypto, stay with this show. Turn on alerts so you know when we're going live in the Kaizen Discord. And obviously, if the content works for you, please let me know. All right, let's welcome who's here. We have Stahu. Welcome. Forced Corazon. Welcome. Kane. IPWN. How you doing? Kita Sira's here. Good morning. Lisa, welcome. Javier, Warmon. Caleb, howdy. Sean, Marco. Kristanas, good day. All right, we have Eldridge, Marco, Seadoy, HDSZ. Good morning. Good morning. Here's what we're doing today. One, we're getting out of the weeds. It was like, up, meme coins top, up, meme coins bottom. And I'm like, you know what? Wait a minute. Sometimes when you get caught, in emotional tactical movements, you either forget why you're here in crypto or you forget the big picture. So today, I'm going to talk a little bit about the Bitcoin halving. I am going to discuss tactical charts of, say, Bitcoin. I'm also going to discuss timing around the halving, some work there. Also on the macro front, everyone, including me, was like, inflation spooks the market, booga booga, bonds, stocks. And I'm like, you know what? I got some messages from a chat room from a bunch of guys I used to work with, and they're actually talking about commodities. And you may notice the dollar is getting hammered this morning. Very interesting. Rising commodity prices is a way of devaluing the dollar. In other words, if you go to the famous chart book, which the guy was sorry he ever wrote, because not everything follows the relationships in these books. But the guy that wrote the chart book wrote Intermarket Technical Analysis. I swear this book is a classic in a sense. It's like a case study of what worked in the 80s and the 90s in terms of like looking at, like, say, oil and then how that would affect bonds. Okay. Now, he wrote it. People took it as gospel. He regretted writing it. But some of the stuff that he's talking about the dollar and commodities, all of a sudden just kind of popped up. That, and we have Federal Reserve officials trying to tell you how great the economy is. All of a sudden, it's like, you guys were perfectly willing to have everybody cut rates and ramp the stock market, okay, to make everything look pretty. And now you're out on the tape like you're campaigning, telling us how great everything is. Meanwhile, everybody's like, you know what? That's nice. I'm going to buy commodities, which, by the way, crypto is included in that. So perhaps everybody's been looking at the big picture and everybody's gotten distracted by 20% swings in altcoins, when the reality is crypto is money. Bitcoin as, really our incredible future as a way to disconnect from the system. We'll hear from somebody from Goldman on that. Okay. Bitcoin is a way to disconnect from our system, and something that nobody's really talking about, which is the absolute ignition liftoff in Web3 as soon as the distraction of the Bitcoin halving and the eclipse are out of the way. Okay, welcoming F. Morales, Del Capio, Muse, Bala, Malik, Camilo, Giselle, Ethan, Madge, Matic, welcome. Okay, we're going to dive into the news. And you know what? Today, I don't know. Today, I want to do this like fireside chat style, right? Kind of like what we used to do when it was a weekly webinar. Okay, so U.S. job openings rise modestly in February. Labor market's still okay because everyone needs 2 jobs, right? You can go to TikTok, you can go to any of these sites, Wall Street Silver, any of these sort of like right-leaning financial Twitter feeds, And they're going to have somebody from Gen Z every day coming out of the US or Canada talking about how they're having trouble making ends meet. Right. And, it's easy for people to say, well, crypto speculation is no good. Well, it's not no good if you need some kind of alternative, if you're over what's happening and you need to do something. Now, we got a couple of Fed officials out today. So we're hearing from all the boomers. Feds raise long-term rate outlook because the U.S. economy is super strong. The U.S. economy is doing fine, right? It's not a disaster, but it's really funny how everybody is all of a sudden hitting the tape in an election year, telling you how strong everything is. Huh. Okay, so Pomp is a famous Bitcoin maximalist guy, a total OG in crypto, is referencing a Wall Street Journal article called Bitcoin is Soaring This Year. Goldman's crypto skeptic isn't biting. Okay. Now, this individual who's a Goldman Sachs partner, and we need to talk about what that is for just a second. So a Goldman Sachs partner is clearly a unicorn. I don't know. I don't want to say it's impossible, but it is incredibly difficult for somebody to make partner. You probably have to interview with 500 people everywhere in the firm before they will accept you as a partner. Okay, Goldman is a publicly traded firm, but they still have this distinction, which comes with, rank and money. But here's the catch. Most partners only stay partners for 2 years. Okay. Reason? Well, they throw you in the pool with the sharks. So if you've been outperforming, they expect parabolic outperformance once you're a partner. If you don't go parabolic, they shuffle you off because there's people underneath you who need to make partner. Now, this individual, okay, it's in here somewhere that, oh yeah, here it is, who happens to be the firm's second longest tenured partner. Now, if most partners get shuffled out in 2 years, in order to be the second longest standing partner, that essentially means the wheels of the Goldman machine don't turn without this individual. Okay. So she's a, chief investment officer, private wealth management. Okay. And here is this person, right? And it's everything you would expect from somebody from Goldman, right? They went to Princeton, they went to Stanford, they got engineering and economic systems degree. They're on the board of a major hospital, and she's big enough to have her own center for business and government at Harvard, which perhaps leads me to wonder how she feels about that, considering their brand failure recently. Now, this person who we're going to look at as I talk doesn't need money. And she works with people who doesn't need money, and her clients don't need money, and they certainly don't need a parallel financial system. So her argument about why we don't like crypto is very simple, right? We can't value it. Most of it's speculation. It's too volatile to be money. It's $2.5 trillion of vaporware, etc. Now, here's my counterpoint. What do we have to pay? This is why the picture's up here. What do we have to pay to get away from you? What is the value of getting away from you? That's Goldman's building at 200 West, which, I worked there. I got to visit it. It is unbelievable. My parents came in from Jersey to take a picture of me in front of it back when I worked there. So what do we have to pay to get away from all of this? 2.5 trillion or more. We need a new monetary system. Kids are crying in their cars, right? They can't afford anything, right? Why do we need Wall Street banks? Why do we need big tech companies? We don't. Or let the market experiment with trying to figure out whether we need it or not. Right? When something is worth 2.5 trillion, when people are in this market taking the kind of risk that they are, namely, you could wake up one day and it could be 40% in your face, or it could go to zero, or it could go to the moon. When people are taking this kind of risk, it's because they want something different, whether they know it or not, right? If you're FOMOing and you're like, oh my God, the Toby Frog coin on base, gotta have it, okay? You're a part of a mechanism where we're trying to get away from this, right? A different form of money, a different form of looking at the world, which these people, frankly, cannot possibly understand. I knew them. I met them, not this person. But I think it's very relevant, particularly when we start talking about legacy and the dollar. Now, here we are in legacy, okay? S&P 500 ETFs, right? So ETFs can have Bitcoin, ETFs can have 7 stocks, ETFs can have 500 stocks. S&P 500 hit a record of 27% of ETF inflows. The rise of the magnificent 7 stocks have led everybody to just drop their money in S&P because it's theoretically diversified, and the magnificent 7 are so big, it just pulls everything up with it, resulting in basically up-only price action after last year's bear tightening-related disturbance. 23% of all ETF inflows are going into a legacy product, to Silicon Valley, to Goldman, to Wall Street. And I have a little stat on this later, but what happens if that shifts to crypto? What happens if some of that money shifts to crypto? And everyone's like, well, that'll never happen. That'll take 10 years. Will it? Will it? Right? In other words, people figured out Solana pretty quick. People are going to figure out Base pretty quick. Coinbase was like the number 5 trending app when Bitcoin took out the all-time high. How long does it really take? These are things you need to remember when, you get rattled over the last couple of days, which, again, fireside chat style. One of the things that, in my opinion, is good about this show is that you're literally watching me figure it out live every day. I wake up in the morning just like you do. I go, okay, what are we going to do today? Okay. So again, everyone in this, Eurozone inflation falls. I got a funny question for you. It's just a question. So we recently had problems with a chicken plant and another problem with a meat processing facility in the United States. I'm starting to wonder, is inflation a scam? Yeah. Is inflation a scam in some ways in terms of what you're paying at the store? Is it engineered by a government? I'm not saying it's not there. It is there. But is it really as bad as people think? Now, I've got the other side of the argument here in a second. Okay, so inflation is there. And what's the biggest reaction to inflation historically, based on the book I keep putting on the floor? What's the reaction to inflation? Well, interest rates can go up, but so can commodities. Like, in other words, gold is considered the original hedge against inflation. Gold hits a new record as investors seek a hedge against stubborn inflation. Okay. What does the best when gold and silver rally and the dollar falls? Ethereum. Like, I watched a video, a demonstration of a guy trading on his phone in a Coinbase wallet in ETH. And I'm like, oh my God, we're selling Ethereum at $3,200 when this thing could become like, you could reinvent the 2020 DeFi, mass wave of ETH related speculation if everybody gets over to Base. I mean, I don't think people understand. People are like, yeah, Base season is coming. I guess that's kind of consensus. Yeah, but man, if that's not just meme coins and you have this going on at the same time, like, this is not theory. Like when I say, oh, ETH does good when gold and silver go up and the dollar goes down. Okay, well, today, that's not theory. That's happening. All right, silver. Inflation risk latecomers pile into silver. Okay, written by a Bloomberg macro strategist. Okay. Will Ethereum ride the crypto bull market and reach $10,000 in 2024? Okay, a word on ETH. Everybody is fixated on that big even number at 10,000. I would prefer to talk about the shock of 5 or 7. In other words, can you see the headlines like Ethereum blows through all-time high, hits 5,000? What's the rest of the market doing under those circumstances? And for the lesson, why am I getting caught up because PopCat went up 40% and then went down 60? Like why am I getting wound up about that when this is out there and happening? I'm like, wait a minute. I shouldn't be. Okay. And here is more like, I don't know, more FUD, right? Silk Road, $2 billion, whatever. Sell it at the market, dude. Michael Saylor will be down there taking it from you. You know what I'm saying? Like, why am I getting upset about this? Why? I mean, can the market go down? Yeah, the market can always go down. But I mean, we're always full. I mean, look at this. Like, do you think this, oh, government moves Bitcoin around and this are unrelated? Oh, the economy's fine. Everything's great. Oh, yeah, don't do any Bitcoin. Oh, yeah, that's bad. Yeah, that's bad. Let's call this lady at Goldman and ask her what she thinks about crypto. Who cares what she thinks about crypto? I mean, yeah, she just got famous. It's a good move on her part. But do you think these things are related? I got news for you. I believe personally, there's no such thing as a coincidence, right? And of course, here's the media, you know. Powell emphasizes need for more evidence that inflation is easing before cutting rates because everything is fine. Yes, inflation is not good, but seriously. And of course, they love to jump on the fact that Bitcoin goes down as interest rates jump, right? Big headline. Everyone get all upset about it. Meanwhile, the Chinese can't pile in fast enough. Fascinating that Hong Kong wants a Bitcoin ETF when mainland China still doesn't allow crypto. See, the Chinese communists are going, gee, you know, we kind of screwed up, I think. I think we screwed up by letting all the Bitcoin miners go. I mean, they're buying all the gold in the world. Why wouldn't they do Bitcoin? They're like, okay, well, maybe we can do a reverse course and let Hong Kong do the Bitcoin ETF. You got any idea? Like, they got serious economic problems over there. Serious. I know there's a lot of selling. It's weird. Like, the Asia hours always see selling. I can't quite figure out what that's about. But I do know that if you offer Bitcoin to a bunch of people who are experiencing economic distress with their currency or their economy, this is a lot bigger than anybody thinks, because what it really is a Chinese about face on crypto. Okay. Now, a word on geopolitics. Okay. So we have somebody who thinks war in the Middle East is going to break out in 48 hours. You know what, folks? I know a geopolitical strategist, and he said rumored wars never happen. Okay. And I'm going to tell you what would happen if this actually did take place. We're going to go over some of the charts about commodities and the dollar, because again, all the ex-Goldman hedge fund guys are looking at it, and it's very relevant to crypto. Okay. So Tyler likes the market update. I'm glad to hear that. Okay. Jane said friends in Asia are doing crypto anyway. Right? Check it out. Okay. Jamul, Baziv, welcome. All right. Now, let's head over to PowerPoint. Okay, let's talk about the Bitcoin halving and mining. Bitcoin is a proof of work currency, which means the people who run the network or the miners have to do these unbelievably tricky mathematical puzzles that require absurd amounts of computing power in order to process a block or transactions. That's how I think of it. The first miner to decipher the puzzle gets to create the block and receives Bitcoin. So they got all these computers competing to solve these ridiculously difficult nebulous problems, math problems, in order to be able to create a Bitcoin block. Now, to create these Bitcoin blocks, or for the incentive, they get Bitcoin, as I said. Now, what is the Bitcoin halving? Well, it's something automatically programmed into Bitcoin called a release schedule. 21 million Bitcoin will ever be created, so the halving can have a huge impact, meaning the reward for doing all these difficult mathematical puzzles falls in half, reducing in less Bitcoin supply. So back in 2012, it went from 50 to 25. Imagine getting 25 Bitcoin now to solve a puzzle, right? Then it went to 12 in 2016, 6 in 2020, and now it's down to 3 per block. Okay. Now, everyone thinks this is going to impact miners. They're going to have less revenue, blah, blah, blah. I disagree, because Bitcoin with 3 per block is going to become so scarce, they're going to have to buy the miners. Now, all this said, okay, these things, the Bitcoin halving has almost become a distraction. It is. It's a distraction. A distraction from what? Well, how about the emergence of Web3, right? How about the emergence of Web3? In other words, what happens if the Bitcoin halving, the supply reduction, and the ETF, it's not priced in, because I don't think it's been fully traded. But what happens if it's not as big of a deal as people think? Or what happens if the supply shock is so great that it caused not only Bitcoin to go up, but it shocks these people in the sense that it allows for the creation of Web3. Like, no one is talking about this. What happens if the Bitcoin halving is the ignition point, not just for Bitcoin, but for the creation of Web3, which these people at Goldman think is unnecessary, trivial, highly speculative, whatever. In other words, think about it. People think the shock of the Bitcoin halving, sorry to jump around, down here where you're at 3 Bitcoin per block, what happens if that supply shock, which sounds negative, is actually positive for Bitcoin, positive for miners, and then everyone goes all at once. He goes, you know what? Bitcoin and the future of money are where it's at, because we got to get away from that lady and everyone like her. And then we're going to go invent Web3 starting right now. Like, I don't know that, I mean, alt seasons can follow the Bitcoin halving, but it hasn't occurred to me when I'm talking that you can wake up one day, have the dollar falling, commodities rising, Bitcoin is a commodity and that's rising, and then you wake up and Web3 takes off, right? Especially when everybody is kind of like focused on meme coins. Maybe they're overly focused on meme coins and not looking at layer 1s, layer 2s, real world assets. You know what I'm saying? People get caught sleeping. So people are like, well, what do I need to know about the Bitcoin halving? Supply shock. Okay. Miners are going to get less of a very scarce resource. People assume miners will suffer. That's only if the scarce resource goes down in price. And if Bitcoin starts going parabolic, because we will talk about that, what happens if it takes all of Web3 with it? That is your elevator pitch on the Bitcoin halving. Okay. Again, more Fed guys. U.S. adds more private sector jobs than expected. Pay gains for job changers accelerates. Okay. So this does put the brakes on the Fed because the Fed doesn't have the data. I still think they're going to have to do it for other reasons. Just not inflation. Something else will rear its ugly head. Okay. And again, Fed raises interest rates. I mean, Fed thinks the economy is great. That's what everyone's talking about. Now, let's talk about what can happen after the halving. So everyone is like the Fed. Everyone is like inflation. Everyone's looking over here, and I want to look over here. Like, what's over here that no one's looking at? Otherwise, why watch the show? So here's a friendly reminder. I played around with cycles. I played around with Fibonacci math. And here's something I came up with in English, right? Bitcoin usually starts going parabolic 15 months after the bottom of the previous cycle, which was December of 2022. So that means Bitcoin could start ramping. Oh, wait, March of 2024, huh? We're here. Huh, check that out. All right. March of 2024 was 15 months into it for this cycle. This could imply substantial upside. And in light of these charts, a 10% correction feels like a gift because, according to this Fibonacci math that I do, there could be another 20 months. And I pulled this out and I was like, Bill, you're on TV all wound up about, oh, did we get out of meme coins in time? Did we buy? Did we? Wait a minute. Wait a minute. Wait a minute. Who cares about Bitcoin at 64K if we got another 20 months of this? 20. The long-term upside target for Bitcoin is 150 by May of 2025. And the most extreme case is 213 by December of 2025. Now, here is the dizzying graph, right? Simple, right? You just look at the overall trend. You know, this is back 2015 to 2017. 15 months, you kind of go this way, and then you go parabolic for 20. Then you go to the bottom of the next cycle, 15 months, and then it goes parabolic for the next 20. In this particular case, right, it's actually done quite well relative to history because of the ETF, but we're 15 months in, and then it's 20 months of parabolic, right? So this over here, the squares, this square, and this square. And I pull this up and go, and I'm getting all wound up because PopCap went down 20%. Not picking on PopCap. You know what I'm saying. I'm like, wait a minute. And then you start putting this together, right? So this is Fibonacci circles, which are like a subjective way of viewing fib work, right? I connect this low and this high, and the circles fan out and give me interesting levels. And then I used a linear regression tool, which is mathematical, right? It's just like use statistics to show me a band of what Bitcoin's done over the last 200 days or the last year, roughly. Okay, boom. And here we are. We're sitting at the midpoint. And then I noticed that the regression channel intersects some circles on April 19th. And I noticed an intersection on April 24th. So when you draw things like fib circles or Gann lines, you're always looking for where they intersect. Like this one set of lines intersect another. In this case, I use something woo-woo like fib along with something statistical. Now, what's going to happen around April 19th and April 24th? Well, you want to pay attention to these inflection points because that's the halving. Lo and behold, right? The halving shows up on, kind of like outside the box TA. Right? And I got this for a bunch of other coins as well. ETH, interesting. We have, because ETH's had a vastly different trajectory than Bitcoin. But the circles in ETH give you an intersection at April 7th. That would be the eclipse. And April 27th, which is 10 days after the halving. These intersection points, I would call them inflection points. So miners are going to get an incredibly rare asset. The asset, the supply is being reduced. The value of that supply could go up dramatically. Miners are undervalued. Gold and silver are moving, which favors ETH. Okay, by the way, just as an aside on altcoins, Tau, I didn't draw the statistics framework, but this is an expanding range, which is a very powerful consolidation formation, and it's intersecting right at the fib circle line. I'm wondering if this thing can embark on I'm wondering if this is the start of a monster rally. Remember how I'm always telling you, like the altcoins that are next are the ones that went up a lot and haven't done anything lately. This broad consolidation pattern, like when you break out of one of these things, it can be unbelievable. Seen it before. Now, a brief reminder on Bitcoin. I used to work with this guy at Morgan Stanley. He's now a head of like a strategy, sort of like an investment advisory company. So these guys, traditionally, they say take 60% of your money, put it in stocks, 40% of your money, put it in bonds, and that's that, right? That's what they do. Okay. Now, what this guy wants to do, okay, is he wants to say 20% of this portfolio should be in Bitcoin. This guy is advocating that when these guys do their 60-40-ish asset allocation math, that he wants to go 20% Bitcoin. Okay. It's like 50 down here. It's 50 cash, 30 stocks, 20 Bitcoin. Can you imagine if anybody adopts this? This doesn't require anything except investment advisors to say, yeah, we should go 1% Bitcoin or 3% Bitcoin. This is a chat GBT thing from a long time ago, or I think it was Bing, or it's now Copilot. Okay. If 1% of $56 trillion in global pension funds found their way into Bitcoin, that's how you get these $200,000 price targets. Now, is that going to happen overnight? No, but commodities are rising as we speak, and the dollar may have topped. So this puts commodities, which again, crypto is a digital commodity, which fits very well with the supply thing with the miners, right? The supply of the commodity is falling as demand is rising, and $56 trillion awaits a home, or even 1% of that, which is 560 billion. CRB index. This is an index of commodities. So some inflation is bunk, but obviously CRB is heavy in metals and food. Metals, precious metals are breaking out. Oil is doing better. Chocolate and coffee have like 10x'd. And this is breaking out of a giant 2-year triangle. Why do you care? Because commodities up, dollar down. Right out of the book. Plain as day. Commodities up, dollar down. Silver, weekly. Don't you like this little fake out down here, man? Whew. Look at them stop people out. It's like, I don't know, that's like a couple of months. Now it's going the other way. ETH, remember. Oil. Now this is a mixed bag, right? You will, crypto people will by now recognize this as a cup and handle, right? You make a bottom and then you chop around and make it difficult for everybody, and then you take off. So if there's a shooting war in the Middle East, oil is poised to go much higher. Okay. Meanwhile, the dollar may have topped. This commodities thing may start hurting the dollar, because the dollar should be up, right? I mean, or at least that's how they think of it, right? Because everyone's like, oh, everything's great with the economy and we're not going to lower rates. Yeah. Why is the dollar lower today? Dollar's in like full reversal mode. Now, this is UUP, which is an ETF to trade the dollar index. To keep it very simple, there was a rally in the dollar. It was supposed to be a top or a pause. It turned out to be a pause. The rally resumed for 4 days and then failed. You know how I'm always telling you that like the most bearish things are things that are bullish that fail? Okay, well, this is one of the more classic cases of, okay, we should be trending for 2 more weeks. Oh, no, we're not. And those can create some of the biggest tops and bottoms. Okay, this is delayed data, but this is a 9 top in the dollar. This is the actual dollar index right at resistance. So they bid it up, they bid it up, they stopped everyone out, they stopped everyone out, they pushed the dollar up, and then boom. Okay, now some of these things, you know, higher interest rates, not particularly good for crypto, but I'm sort of wondering, after I went wah, 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 wah about this, along with everyone else going wah, 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 wah about this, whether or not we had the wrong wah, 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 wah. whether or not we should have been looking at commodity. Because when my little thing beeped, and I was like, oh my God, look at my ex-colleagues are all looking at commodities. Let me go look at that. Oh, wow, look at that. Commodities are going up. Oh, look, the dollar's down. Huh. And everyone's selling ETH and no one's talking about it. And this base narrative is incredible. I mean, this guy's like, yeah, here I'm going to push a button. I'm going to get ETH and base. And here I am off to the races on your phone. I mean, it doesn't get any easier than that because normies can work through the Coinbase wallet to get on base. There's none of this buy Solana, wait 5 days for the money to clear, then transfer to Phantom. Normies can just go right in. They can go right in, right? So the macro case for ETH is there, and so is the dollar. Okay, so just rounding it out with some tactical things. Bitcoin hit support at 64. These dotted lines are drawn by the automated DeMark system. Again, this is a trend you see often in crypto where you go all the way up, everyone gets excited, and then you stop everyone out. And everyone gets bearish and everyone's like, oh my God, and it's going to go to 50 and I don't have to worry about buying. I can do it lower and I'm going to sell my position. You don't have to sell your position, but if you sat in Bitcoin and Solana and ETH, maybe you're going to be okay. And then once that halving comes out, if you got your altcoin lists ready, you start piling in. And I don't think Tao's going to wait. That's just one example, right? There are going to be examples like any altcoin, in my opinion, that does well between like it doesn't, the eclipse doesn't affect it negatively if there's volatility, meaning it goes down and comes back, or off the halving, if there's any downward price action, it doesn't move. Same thing, or they start taking off. Anything that shows relative strength around the halving could be a long-term hodl, even if it's already 5x'd. How's that for your morning market update? Think about it, right? In other words, everyone's looking for the fast trade. No one's thinking about like the big picture of, oh my God, is this an opportunity to buy the absolute heck out of Web3, layer 1s, layer 2s, real world assets, cross-chain? You've heard it from me. Okay, so Solana, there was support at 172. It didn't get there. It's back at resistance at 191. Don't fade this thing because of the mobile phone. Everybody thinks this is about small coin trading. It is. Okay, but don't forget the Web3 part of Solana. Because if I was Solana or I was any of these projects, like I saw Polkadot had this little meme coin pop up the other day. Everybody's got to have an announcement for consensus in May. And if they don't, they're stupid. Right? If these guys do a mobile phone stunt and normies figure out that this is about speculation and Web3, even though Web3, like last cycle, they turned it into the dumbest thing. It was like, oh, here I am in a bunny outfit handing out QR codes for an NFT. I'm in Web3. What do you do? It became a dirty word. But if that changes and Solana is then associated with Web3, watch out. Okay. So I hope that made sense. I hope that made sense. Okay. Somebody's asking me, why is the USD so weak versus Latin American currencies? Okay. Well, I haven't looked at it, but I don't know, man. If you were somewhere and you wanted to get, if you had dollars, where are you going to go with the dollars? Like, you're not going to Canada. You're not going to Europe. You're not going to Russia. Like, demand for Latin American currencies, if Argentina and El Salvador are like setting a trend, that's just a guess. Okay. That's just a guess. Yes. And they may have the commodities. Okay. So we got some requests. So I see SEI and Fetch. All right. So let's just take a look. Share screen. Okay. So things like Fetch kind of shook everybody up the other day. And honestly, even though I'm talking big picture, I'm still looking for small picture bottoms, right? Okay. And lo and below, you can chat GBT this. I did it once. A possible diamond bottom. There was a diamond bottom in MicroStrategy when it was at 300. See how this thing is like it's kind of like percolating underneath the surface. Like, I know what everyone wanted yesterday. They wanted the market to go down and then go up 40% and go up forever. But this little bit of hesitation is actually more bullish, in my opinion, right? And you should be out there looking for Web3. You got 2.5, 3 weeks to do it. Okay, SEI. Okay, so one of the reasons why I like these linear regression channels, a guy at Goldman got me into them, is it's not always perfect because things can change with the trend, but you'll notice that they love to go outside the trend. They like to go outside the resistance band. It's just interesting, right? Like, hey, they love to venture out and then they come back in and then they touch it and then they go back. And then look what they're doing here, like the individual candlesticks, right? Like, what's this in SEI? What's this? Stop fishing. Oh, where are the stops? How do we get everybody out? Where's the top of the channel? I don't know. How about $1.25? I bet you could do this all day, right? All day. Okay. Right. Caleb said Ocean, Fetch, all showing similar patterns. Okay. So, right. So Akimbo is saying, I see two different setups. One setup is called hidden pivot analysis. The other one is Fibonacci extension work. So that's kind of its own little clinic. Somebody is asking, what do I think of investing big long-term in spot for like ETH and SOL? I'm not supposed to give investment advice, but have at it. I mean, I can tell you that on this dip, I bought Solana and Bitcoin, and I'm going to want ETH for base. So, it's not investment advice to tell you what I did. I grabbed Solana and Bitcoin, right? Because if this halving thing is what I think it is, then everyone is looking at the market in the wrong way. Everyone's looking at, oh my God, how am I going to speculate and make quick money versus could I get on some kind of gigantic long-term uptrend line or some sort of gigantic long-term uptrend? Okay, let me attempt to summarize. Hopefully all this made sense. Bitcoin is a rare commodity. It's getting rarer. Commodities in general are rallying, which has created a dollar top. Buying commodities is a way of devaluing the dollar. Obviously, lower dollar helps crypto, or at least helps crypto deal with the fact that, the Fed isn't going to be doing rate cuts now until an event happens. I'm skeptical of the government telling you everything is okay. The more they tell you everything is okay, the more it isn't. And we do not need stuffy people from Wall Street to tell us that we're doing the wrong thing by doing something to try to get away from them on the money and technology front. So if you got chopped up, I got a little chopped up. If you felt bad, you felt bad. Okay, that was a day. Then you realize what you're here, the rarity of the assets that you're trading, the necessity of the assets that you're trading, and the fact that once the supply shift happens, this alleged sell the fact mentality could wind up getting turned on its head again, because the Bitcoin ETF was supposedly sell the fact, And the reality is the flows and the sentiment were not priced in. And I don't think, even if you look at a layer one that's up 5x versus the summer, or something like SEI, and everyone goes, yeah, I missed it, it's too late. In my opinion, you haven't. That's the market update. We'll see you tomorrow.